So first of all, thank you all for coming. I think it means a lot that we can have a FinTech conversation at the GAB. And that tells you where we have reached as an industry and the progress that is being made to demonstrate across the region how collaboration can lead to some really, really impactful outcomes. So in line with our goal of innovation, investment, and impact, today I've assembled an eclectic mix and the best that the industry can offer when it comes to discussions around FinTech and innovation. So I was trying not to be in tie and try and mirror you, but unfortunately, as a regulator, apparently, I'm unable to do that. So forgive me. But I thought we will have this barstool conversation just to give everyone a sense. I think all of you at the table have had some incredible journeys to talk about. I've had the pleasure of interacting with you in very different capacities. So before we even start, maybe to give the audience a sense of who you are and what you do, a bit about yourself, something interesting that I think the audience needs to know. So we can start with Mr. Vanderpuye here.
Well, you can just call me Curtis. Well, Curtis, I'm from ExpressPay. I'm the CEO of ExpressPay and one of the co-founders. Yes. I assume that the lady over here is one of our customers. So a lot of people know us for our app. We like to believe we have the best FinTech app in the market for consumers. A lot of users use our app for money transfers, various bills, and so on. That's what a lot of people know us for, from the consumer side of the business. But from a B2B perspective, some of you would have interacted with our POSs. So we collaborate, compete with banks in that segment of the market as well. We also enable payments for people who want to accept payments online. So if you have a shop, you need a way to receive payments, we facilitate all of that. So that's us in a nutshell.
Thank you. Saqib?
Hi, Saqib. I'm CEO of CrossSwitch, which is a recently licensed, enhanced PSP. I also run a pension company called People's Pension, which targets the informal sector, which I think for the purpose of both banking and pensions and financial services is very exciting because it makes up 80% of the workforce. We've all seen the massive amounts of mobile money transactions, and I think that's an area which will continue to grow, and it's an area which creates amazing opportunities for fintechs and for banks to collaborate on. This is an area which is very close to my heart. There's so much to do, and I would really invite everyone to look closely into that sector. Thank you.
Hi, good evening. My name is Patrick Quantson. I'm the Group Chief Executive of Seven. I also double as the Chief Transformation Officer of Kowri. A lot of you know us as DreamOval before. We've pivoted and rebranded into Kowri. We tend to think that today we are providing and extending access to financial services away from just payments and collections, because we see a really begging need on the continent to extend financial services to millions of Africans on the continent. So that's what we do. We're really passionate about it because we think that is what the continent needs at this stage to go forward. Thank you.
Thank you very much. Please, a round of applause for our speakers and panelists. So I think many of you are very humble and given a bit about your background and what you've done, but there's a reason why you're here at this discussion today. And perhaps I'll start with you, Patrick. Given that you've enjoyed the journey of being a banker and at the same time a fintech, but just for the record, I think everyone who was in the fintech world always looks suspiciously at Patrick that he was a fintech, wearing a banking jacket. And so can you really tell us about, from your experience, and it doesn't have to be about SlidePay, just in general in the market, what are some of the successful collaborations you have seen between banks and fintechs and how it has made the market at least demonstrate a bit more progress, particularly at the early stages where this industry was very not well understood, if I should say?
Kwame, thank you. It's a very interesting question. Just 2 years ago, I was a banker like Kwame. I couldn't wear this to an outing like this. So it's refreshing not to wear a tie all the time. And I decided to make a crazy switch to join the FinTech. For the simple reason that, if you look at FinTech and bank collaborations for the past, say, 5 years, I tend to say that the collaborations have gone on for the antithesis, which is that, in the past 5 years, the FinTechs have looked to the banks as a big brother with a massive asset base, massive customer base, with a lot of cash to go collaborate with. And then the banks have looked suspiciously at the FinTechs as this agile, innovative disruptor who's coming to chase my customers and all these other things, right? And so if you look at the past relationship, even though it has really changed the industry, it has really been for the antithesis of why the collaboration should be. However, that basis has set for me what is the foundation of where you see FinTechs today. Because those collaborations really lay the pipe for safeguarding, if you will, the money in the way the FinTechs have transacted. So the banks in the early days who act as sponsoring banks would really ensure that for you as a consumer, you had confidence that your money was safe, essentially. Because all these innovative players were there doing all these wonderful things, and yet didn't have, if you will, the compliance rigor of the banks. So the innovation and the collaboration has been fostered by the need for the FinTechs, essentially, to have this strong collaborator that ensures that your money is safe. And that's gone well and well for all the FinTechs that collaborated with the banks. Express Pay is a beneficiary of that. All the FinTechs have this sponsoring bank who essentially will hold the money, will do the reconciliations and the settlements on their behalf, just ensuring the sanctity of the services that was offered. So that was sort of the early days of the collaboration. And then it precipitated quite fast to say that, what value can each bring each other in the evolution of it. So you saw, some of the FinTechs taking on some of the banking products. There were virtual cards that were sponsored by a bank player, etc. So the innovation evolved pretty quickly away from, if you will, the compliance and the regulatory side of things into now hardcore innovation, really around extending some of the services of the banks to the FinTechs and vice versa. And then the banks then benefited enormously from the FinTechs now helping them to do some really rapid innovation. They took advantage of some of the FinTech expertise, etc., to really just extend services. And there are several examples, but you find that all the FinTechs that have made it through up until now have had some grounding in the banking relationship, etc. So in the beginning, there was this suspicion, if you will, in banking boardrooms. I used to sit in a lot of banking boardrooms, and every time, we check ourselves around who was the FinTech coming for our business, etc. Right? So there was a lot of suspicion in the beginning. We're worried that, the FinTechs will eat our cakes, and all these other things. But I think increasingly now, you are seeing value. My theory of change, and I think that the real thesis for the collaboration moving forward, is one of deep necessity, okay? And it's necessity around ensuring that millions of our brothers and sisters on the continent benefit exponentially from getting seamless and secured access to financial services, not just payments and collections. Today, if you go around and you ask a small business whether they have a payment or collections need, they don't. I think that, indeed, the way we've structured our digital services, SMEs and the like suffer because every time you want to go digital, you pay fees, whereas if you're dealing cash, literally was free, okay? So I think the necessity now is that a lot of people today on the continent need access to really hardcore services like insurance, microloans, revenue-based financing for businesses, etc. And the collaboration with the FinTechs now would enable that to happen at really fast pace, okay? So the banks, I tend to think, will give their crown jewels, which is their traditional loan product, their traditional savings, investment, insurance product, to the FinTechs to distribute at large for them because of the agility and the competencies the FinTech bring, okay? And this is really, really important because if you also look at the fintech landscape, I tend to say that the market has corrected itself since 2022. So if you look at funding for fintechs, we are going to see a lot less of these outrageous raises that the fintechs were raising. And so the fintechs now also have to really scale differently from doing Series A, Series B funding, etc. Right? At the same time, because of what has happened, especially in the Ghanaian economy, where the banking model now is disrupted, and I tend to laugh at my banking friends to say, banking really is about lending to the most riskiest borrower and charging them a premium, having mopped up money from all the poor people. Okay, but today that the government is not secure and it's not risk-free, I tend to think that the banks would also butter their bread a bit differently. So I tend to see the evolution of the relationship going into a real place of need around servicing real customer need, as opposed to a marriage of convenience where each partner is taking advantage of each other essentially in the way they come off as being either innovative or being able to spread their services at large. So we're going into an interesting place because it's one of real necessity, but to the theme of your conference, it is one that I see would drive real impact because for the first time, that collaboration will go into servicing real people of need as opposed to just servicing the bottom line of fintechs and banks, essentially.
Thank you very much, Patrick. Thank you very much, Patrick. I think what you said is really powerful in the sense that it also does something. It vindicates the hypothesis that Bank of Ghana was working with when it decided to evolve policy to basically make our innovation space anchored on the banking infrastructure. And I think you've gone from enemies to frenemies to friends, and hopefully in that journey, you're now closer and closer and digging deeper into creating value for consumers and for your shareholders. So thank you very much for that context. So next, I guess we'll go to Saqib. And you've had the pleasure and perhaps in some instances pain of going through, and Saqib only mentioned his cross-switch role, but he has a history of providing so many services under a different brand and different companies over the years. But you've gone through the various cycles of what it means for an innovator to, one, reinvent themselves, two, create value, and really be able to go through that full cycle and perhaps restart again. What is your perspective going forward with regards to investment in fintech on the continent?
Thank you. It's a very big question. First of all, being in Ghana, I think a lot of investors tell you if you're not in South Africa or Nigeria or Egypt, they don't want to look at you. So that's one big challenge that we're having to deal with. The fact that investors are looking to diversify. They want Pan-African players. A lot of international investors also see Africa as one big lump, and so it's very difficult for us. Of course, we can't match the scale, the population, the speed at which the Nigerian market has moved. But I think there's a lot of innovation and capacity here in Ghana, which we really have to promote. So we do have to work extra hard, starting out of Ghana. Ghana is home. It's where we know how to get things done, and with the support of various players, get going, and then quickly show, to raise investment, you have to show that you can really scale your product or your service into many more markets. I think that's what typically gets investors interested. Otherwise, typically you're looking at some small grant, or some support from some agency, and that's nice. But really, to become a really serious player, you do need heavy hitters behind you. So that's the big challenge of starting out from Ghana. But Ghana has, over the last couple of years, come up with the right regulatory framework, which is a good start. You see, therefore, a lot of people coming to Ghana to get a license here. There are not many territories across Africa where you can get some sort of fintech license, which gives a certain stamp of approval in going to deal with investors. So that's one big opportunity also. If you can get, Ghana is a great place to start, get going, show value, show your product has a certain proof of concept and can scale. And then quickly, my advice or my logic always is to try and expand into many other countries. And that's the amazing thing, that You know, when you look at many other countries, you see that Ghana is far ahead. You know, somehow, although we are a small country, in terms of innovation, in terms of intelligence, in terms of the products that we have built, across the breadth, you know, they are lacking in many other countries. And so it's very important for us to be able to showcase. And once again, thank you, you know, and I hope the conference, the 3i Summit will prove that showcase to the rest of Africa with all your visiting delegations from Africa, the kind of sophistication and breadth of products that exist in the market today and how we can take them across. The challenge also is, you know, it's a vicious cycle. You do need investment, you know, in order to build products, to build teams, to hire the right people, you know, and these are sometimes very medium to long-term products. So it is also important, you know, to start that fundraising journey. You know, unfortunately also, we've had some bad examples over the last couple of years. Generally across the world, investing has really slowed down. Valuations are negative. You know, people are, you know, having to do down rounds. You know, valuations 2 years ago today are at about half of what they were 2 years ago, and it's difficult convincing investors. And then also investors are primarily in for a very short cycle. They're looking to exit in 3, 4, 5 years at most. You know, and the kind of things we do are very long-term. You know, it takes time in Africa to build products, to get them out in the market, especially if you work in the informal sector. There is a challenge. You know, so the investing journey has been very high. It has its highs and lows. I think what is important for us, you know, looking forward, is to start thinking about the exit. How will I exit in 4 or 5 years? You know, who potentially is out there who could buy me or partner with me? And that's also a very difficult space to look at because we don't have the right examples. You know, so I think what has been our practice is to quickly get to a cash flow positive situation where you can cover your costs. Then it makes it much easier to negotiate with any potential investors. I think investors just look at you completely differently once you are covering your costs. Once there's revenue and there's profit, especially when there's profit, then you are in a position to negotiate the terms. But if you are looking, you know, to sell an idea or a concept, and it's so annoying, you know, when you hear of, you know, people in the US raising money based on, you know, a non-existent idea, you know. But, you know, Silicon Valley is a whole different ball game. You know, so maybe to end, I would like to share something that someone told me once, that, you know, it was an advisor to the US government who I met once, who had been hired to look into what is it that makes a billion-dollar American company. And the first thing he said is, look, it's a myth that you start in a garage, you know, and create this billion-dollar product. The Facebook and Microsoft, they are one-offs. And even then, if you look behind, there's much more going on than you would see. But what is it that makes a successful company that investors would like is a company who has a team of founders. So a team is very important. No one wants to back a one-man show. So it's very important to get a solid team and share the risk and share the task. Somebody has finance, someone has technology, someone understands sales. It's very important to bring these guys together. Secondly, this team should have gone through a career. They should be, you know, between the ages of 35 to 45. They should have gone through a successful career, learned, you know, the ropes. You know, today, if a young kid out of university goes to speak to someone, you know, what's he going to walk away with? You know, sorry if I'm being very general. But it's very important to have gone through a career, learned the ropes, learned the experiences, you know. And then lastly is then to build that this team should be multicultural. You know, it brings a whole breadth of experience to the team. And lastly, then you should have also behind you a good network, a good team, a good board. You know, that's what makes investors comfortable enough to invest in what we call startups.
Thank you very much, Saqib. That is a very good walkthrough of the life and journey of a fintech, particularly from an investment standpoint. So, Mr. Vanderpuye, or Curtis.
I want to say what Saqib failed to mention is that he's actually had a successful exit as well. He really knows what he's talking about.
Precisely. So Saqib has been one of the successful exiters in the market, and This is exactly the reason why I wanted to have him speaking today. So Curtis, you as a CEO of ExpressPay have built products. You have customers here who are clearly enthused about what you do. But I want you to share a bit with us beyond the innovation that we create, because often I think we think of innovation in a vacuum. But you've had several successes beyond ExpressPay as an app. I think most recently is Ghana.gov, which basically has been touted for helping making a certain impact. From an impact perspective, what do you think, first of all, Ghana.gov is doing or has done? But also, how do you see fintechs being able to create more impact with the innovation that is created?
Well, I'll share our story about Ghana.gov, and hopefully that in itself would make other fintechs know the opportunities are possible. So Ghana.gov was sort of built by three companies who are competitors. So ourselves, ExpressPay, Haptel, who a lot of people know as well, and IT Consortium. And we all compete in the space. We all do payments. Haptel does a lot of messaging as well. And we're going after opportunities in the government space. What a lot of people, sort of if you're thinking about payments in general, when you go into a new market, the largest buyer, even beyond payments, is always government. So even though we're here in Ghana and we're serving consumers and we're doing quite well in the consumer marketplace, we're also going after merchants, and there are lots of them. So I keep talking about the informal sector, there's the informal sector, there's the formal sector, and so on. But we were thinking, and we said, hey, if you really want to be successful, you also need to go after the largest opportunity, which was government. Now, we were all going after it, and then we advised to sort of work together. So you have a bunch of companies who are all competing, you have competing products. So that was part of the challenge, was to figure out how do we come together and work as a team to deliver. And Ghana.gov is essentially a platform that digitizes government services. So it allows people to discover government services. There's a central website. You go to www.ghana.gov.gh, where you can access any government service at all. You can find information about different government services, whether it's a passport, whether it's about getting your business registered, whether it's about taxes. You go there, you can access that particular agency and find information about the agency. Beyond finding information about the agency, you can pay for any government service. So lots and lots of hundreds, I'd even say thousands, more than 1,000 government services have been digitized through this initiative. So we approached government and said, hey, we wanted to help digitize payment collections because we do that today. Interestingly for us, several people, just like we have customers here, several people in government also use the ExpressPay app. So we were having different conversations where a government agency will call us and say they love how they're able to do payments easily, but they struggle to collect for their agency. Can we help out? So all of these sort of came together, and us realizing, okay, there's a real opportunity. We should try and do this well. Now, government had been trying to digitize its payment services for a long time. There had been several attempts prior to this, and at least fortunately, the three companies were able to convince government that, hey, give us a crack at it. We know what we do. We are very good at what we do. We live and breathe technology. We understand this space inside out. The one thing I would say, and it's good we are doing this at GAB, is that we even took a step back and said, yes, this is a massive opportunity, but we shouldn't think about it for just ourselves. So one of the big things, which I think is one of the success factors, was we came up with a framework to open up the collections. So today, every bank in the country collects for government through the platform. And so we said we didn't want this to just be a collections where only the three firms have one platform, and that's the only way you could pay government. But we said we wanted to open it up because prior to that, various banks would own particular government agencies. So you might go to, I don't want to mention any names, but you could go to, say, Registered Generals, and there'll be Bank A. That's the only bank that can collect for them. You may go to, let's call it GRA, and there may be Bank B. That's the only bank that collects for them. You may go to Ghana Education Service, and another bank will collect for them. And we said, hey, we want to democratize this. And so we integrated with all the banks, and we literally turned every single bank branch in the country into a collection arm for government, so that even GRE stopped collecting cash in their branches, right? So the banks then served as the entities that were engaging with the public to receive money for government, and we created a very efficient framework for getting the money through existing infrastructure. So through GIBS, through Bank of Ghana, we worked with all those players to make sure the money could get seamlessly into government accounts very, very simply. And it's been quite exciting, quite successful. To date, we have collected over 200 billion CDs for government. The platform went live in 2020. So in a very short space of time, we managed to be able to...
How much again?
More than 200 billion CDs. over that period. And I think that is a mark of its success. And it's not done because the idea was to continue to bring on board as many government agencies as possible. So we split up tasks. There are teams that are engaged in various government services as we speak to try and make sure their collections are digitized. We do not run the technical platforms for every government agency. What we did was we created a platform to enable the collections so that even other technology firms could go to those government agencies, digitize their platforms, plug into this platform to serve as a seamless way for collecting, whether it was through cards like Visa, MasterCard, through mobile money, MTN, Airtel, Tigo, what have you, and through any bank branch, all for government. And it's been working well so far. So,
Thank you so much. I think we all acknowledge that this has been a vivid glimpse of the journey from innovation, investment, and true impact. Thank you very much, ladies and gentlemen. Please a round of applause for our panelists.